Now, let's just focus on another space, right? The oil and gas sector. The government has cut the APM gas prices after 2 years, giving a boost to city gas distribution companies. Let's get some more perspective on this. Probal Sen is energy analyst at ICICI Securities, who's with us. Probal, good morning. Great to have you with us here. Thank you for your time. What is, Probal, your revised F526, F527 gas cost assumption for city gas companies post the APM gas cut?
Honestly, we've at this point looked at it as a scenario, because if you look at it, the price scenario keeps continuously changing. And obviously, this decision is a little bit of a positive and has a 4 to 5% annualized impact on the EPS if it lasts for the full year. So obviously, that's something that we'll observe closely as we go along in terms of where the crude price actually lands up at. At the end of the day, now from a discussion where the cap of 6.5 and now 6.75 was considered to be vulnerable to crude price spikes, we have come to a situation where prices could go even lower. And I would argue that if it was not for the geopolitical risk of the Russia-Ukraine conflict, you would probably see prices, crude prices going down even lower. But that's not the case, and that's not likely to be the case given where we are. So I think it's a little bit fluid. Directionally, obviously, the fact that the government is proactively changing prices in line with the way crude prices are behaving, and when you couple that with the fact that LNG prices also look, vulnerable to supply surplus that is emerging. Every report, at least that we see, suggests that there's a lot of momentum coming in terms of LNG supply additions over the next 2 to 3 years. So in that situation, I think from a pricing perspective, Indian consumers should actually benefit both from a pricing power perspective or from a margin perspective, depending on how they actually play it over the next 2 to 3 years.
Okay, all right. Hi, Probal. Always good to have you on the show in the morning. Probal, are you estimating any more APM price cuts?
Again, it's a simple formula. It's a 10% slope to Brent. So if you look at $6.4, that translates to a price of around $64 that has been assumed, whichever is the period that the PPAC has assumed. So if crude prices were to soften further, I mean, every dollar typically, theoretically is another 10 cents lower APM price as we go along.
Okay, and what is the volume growth assumptions you have for CNG and PNG growth for the coming year?
I think across the board, what we have seen is that, frankly, Q3 and Q4 both have surprised on the upside. So we have upgraded estimates to at least 10% plus across the board. For all the three companies, obviously, specific estimates differ, but it is between 10 to 12%, at least on the CNG front, that we are assuming. PNG, of course, differs because, you've got industrial and commercial for Gujarat Gas, which is lower, and, you've got a different mix for both IGL and MGL. So IGL is in the range of around 7 to 8% on an overall basis. MGL is probably slightly higher, between 9 to 11%. I'm talking from a 3-year perspective. Gujarat Gas is probably a little bit lower right now because Morbi continues to be a bit subdued at this point of time.
Got that. If LNG prices were to soften further, right, what is the margin cushion city gas companies will have?
I think it's a little bit tricky right now, because you've got to make two assumptions. One is that LNG prices continue to decline in isolation, with liquid fuel prices and Brent prices remaining where they are, because that is really where you can actually eke out margin benefits. What is happening, in fact, in Q4, it was interesting. I don't know if you saw the commentary. The CGDs for the first time mentioned that there was a shift in the refineries back to liquid fuels, which impacted volumes to a certain extent. That's not something that we have seen for a very, very long time, because FO and naphtha prices actually declined to a point where they were competitive against gas. I think as far as margins is concerned, one should sort of remain slightly cautious at this point of time when building in any huge margin improvement per se. I don't think that, that's something that we are really building into our estimates as of now.
All right. Probal, we're getting into market opening. So a lot on the street will want to know what is Probal's top picks from your coverage universe. Could you tell us, in that order, the top 3 picks?
I think we continue to remain fairly positive on GAIL, NGL, and Oil India. I think those are the three names that we really like. There are other buys, but those would be the three names that we would pick remain buyers of at this point of time.
All right, we leave it there. Probal, thank you very much for joining us. Quick conversation today. Appreciate it. Well, let's